Hey, it's Mike. In today's investment strategy video, I want to talk about the top investments during times of inflation. As I talked about in my comparison video where I compared two precious metal miners, I do think that inflation is going to play a bigger role over the next couple of years. Um, and because of that, I think you should have your portfolio well prepared because we really haven't experienced inflation since the 1970s. So unless you're like over the age of 60, you probably haven't invested during times of inflation. I haven't invested during times of inflation. So what I'm doing now is I'm doing my research to be well prepared and have my portfolio well positioned in case inflation does happen. So let's go ahead and just talk about what inflation is, why I think inflation may happen, and how best to invest during inflationary times. So inflation is a time when items become more expensive, interest rates go up, and purchasing power goes down. So basically, it could be more expensive to buy, your groceries, more expensive to buy real estate, more expensive insurance, utilities, just about everything becomes more expensive. Interest rates go up. So if you have, let's say, an adjustable rate mortgage on your house or your car, that's going to be a really big problem. And just overall, your money just doesn't go as far as it used to. So, inflation is usually caused by rapid increase in fiat money into the economic system. So one example is the recent $1.9 trillion stimulus bill. Now, while I think the 1.9 trillion stimulus is really, really helpful for a lot of people who are going to need that money who have not been able to work because literally the state, the government closed down their business. Um, it was good to help a lot of people with the stimulus. However, more money into the system is simply going to lead to inflation. That's why if you're an investor, you have to be prepared for what can happen during times of inflation. So during these times, you want to invest to preserve the purchasing power of your money. You want to make sure because things are going to get more expensive. You want to be able to invest. So, if let's say you have $50,000, your $50,000, today, maybe 2 years from now, can only buy you $30,000 worth of stuff if you just hold it in cash. So you want to be able to invest. So your $50,000 today can, at the very least, give you $50,000 of purchasing power 2 years from now, or actually give you more purchasing power in the future. So when the stock, while the stock market does go up during times of inflation, some stocks may not appreciate enough to make up for the rapid rise in the inflation rate. In some cases, during times of inflation, um, the annual inflation rate has gone up over 10%, which is larger than the average rate of return of the S&P 500, which is about 10%. During the 1970s, the average rate of return, the average inflation rate was over 10%, and the average rate of return of the S&P 500 was under 10%. So even if you own the S&P 500, you were losing money relative to inflation. So here are the top inflation investments you want to look at. And these are all investments that did really well during the 1970s and during times of inflation. So they should all ideally work again. So the first thing is just precious metals, gold and silver ETFs, GLD, that's the Spider Gold ETF, and SLV is the iShares Silver ETF. You don't actually own gold and silver, but you own an ETF that will track the price of gold and silver. So these are good for short-term investments. If you want to have a long-term investment in gold and silver, then you probably want to buy the bullion itself, buy the gold and silver, and just hold it yourself. Also, I did a video on gold and silver miners. Gold and silver miners can actually give you a higher rate of return than gold and silver itself. In my video, I talked about First Majestic Silver, AG stock symbol, Barrick Gold, stock symbol GLD. Also, if you just want to own the silver miners as an ETF, there's SIL, that's the silver miner ETF, and the gold miner ETF is GDX. So gold and silver miners, gold and silver, these are two great ways to play inflation. Another great way is real estate. Real estate becomes more expensive. Now you can buy the Vanguard REIT ETF, that's VNQ. You can also buy real estate stocks. So for instance, Toll Brothers, TOLL, they are a property development. They build houses, and so the price of houses are going to go up as people have a lot of money. They're going to want to find places to place their money, and they're going to just buy houses as just a store of wealth. And so companies like Toll Brothers will be able to raise the price of their homes to speculators. Also, you could look at inflation-protected bonds or TIPS. You could just use the TIP ETF. The Schwab US TIP ETF is SCHP. And then finally, Bitcoin. Bitcoin, obviously, there are only going to be 21 million Bitcoin in circulation, so buying Bitcoin is going to be great inflation. You can also buy the Bitcoin miners like Marathon Digital Assets, MARA, Riot Blockchain, RIOT. Also, the Bitcoin miner makers, these Canaan Creative, stock symbol CAN, they make the actual machines that the Bitcoin miners use. And both Marathon, Riot, and Canaan tend to rise higher than Bitcoin itself during times when Bitcoin rallies. There's also the downside risk that the Bitcoin miners and the miner makers will go down more rapidly than Bitcoin in times when Bitcoin is going through a bear market. So just keep that in mind. But all these approaches, I'm just going to recap them here. Gold and silver miners, real estate, inflation protected bonds or TIPS, and Bitcoin. These are all 5 great ways to handle inflation. Obviously, Bitcoin was around during the 1970s, but Bitcoin is pretty much a digital precious asset. So it should be able to perform the same function as gold and silver during times of inflation. So when inflation comes, just make sure that your portfolio is ready. Just be able to, sprinkle a little bit here. Maybe if you're looking for a REIT or Bitcoin, this will properly protect your portfolio during times of inflation. Okay, so I hope you enjoyed this video. If you did, be sure to leave a like and go ahead and subscribe and turn on notifications. I do multiple daily updates on stocks, stock trading strategies, and market updates. Thanks a lot. Bye.